Hi friends, welcome to the second video of stock market training. To watch first video, you can go to the link shown on the slide. In this video, I shall speak about the process of new issue or IPO. You must have heard about primary market and secondary market. Stock market is secondary market, whereas when the investors get the shares from company, it is the primary market. The promoters or the company requires capital for the expansion or diversification. Large scale business means large capital requirement. The promoters and company have different ways to raise the capital. If the company has accumulated adequate funds through profits, then this can be used and reinvested in the business. The other sources of raising the capital include the loans from banks or fixed deposits from the public or issue of debentures. But company has to pay interest on any type of capital raised through loans. This may result into less profits to the company and the future growth may be slow. To overcome this problem, the method of raising capital through equity came into existence. In this method, the funds are collected from the individual or institutional investors and they are made part owner of the business. They get benefits through dividend and capital appreciation when the stock price goes up. To collect the capital in this way, the company sells the shares through new issue or initial public offer or further public offer. There are certain rules and regulations for the promoter to become eligible for the IPO. When the eligible promoter thinks of IPO, they start with assessing the response that will be received to the IPO. If it is found to be satisfactory, then they start the process of IPO. The promoters decide about the lead managers, bankers, underwriters, brokers to the IPO, and the registrar. The promoter then submits the red herring prospectus to the regulating authority, which has all the details of business. SEBI is the regulating authority in India. After obtaining the permission from the SEBI, the price band of the share is decided. After this, the registrar gives advertisement about the IPO. They print the forms and distribute them through the brokers. The investors submit the forms and money in the banks. After the IPO dates, the information about the investors and the number of shares applied by them is compiled by the registrar. After compilation, there may be two different situations. One situation is that the IPO is undersubscribed. In that case, all the investors are allotted the shares they have applied for. The rest of the shares are bought by underwriters. If the IPO is oversubscribed, then shares are allotted through lottery system. The investors are informed about the allotment and the shares are deposited in their demat accounts. If number of shares allotted are less than the investor has applied for, or he has not allotted any shares, then the refunds are made by the registrar. After this, the stock is listed on the stock exchange and is available for trading. Those who do not get shares in IPO can buy in the secondary market, that is in the stock exchange. Now the important point here is how to select the company in which money should be invested. The answer of this is the company which has excellent financial performance and the scope of future growth should be selected. Though it looks simple answer, it has many aspects which should be studied in details. For new company, red herring prospectus should be studied for the details and the scope of the business. For old companies, lot of information about the fundamentals of company is available on the internet. The company's analysis about performance comes under the head of fundamental analysis. Friends, in coming videos, I shall try to give information about some of the aspects related to the fundamental analysis. Till then, you keep watching, sharing, and subscribing these videos. Thank you and have a good day.